Monday, October 17th, 2022, Maneco 64, home of alternative economics and contrarian views. So today is the last chance saloon for UK PLC. That's my opinion. We've had a historic last month in the financial markets, in the currency markets. It's been building up, of course, for decades. The profligacy of the UK government, the recklessness of the Bank of England, they all culminated with a mistake by former Chancellor Kwasi Kwarteng. Yes, anyone could have made that mistake, I would say. I did reiterate at the time that with the package before the mini budget of capping energy prices, that made it even worse. So we're going to look at that and see whether Jeremy Hunt, who's the new chancellor, will be able to magically fix things. My view is that he won't. Yes, and I think he's going to go too much the other way to try to fix things, and it's just going to make it just as bad for the economy. Before I start, though, I like to say Billy and I have been out. It was pouring outside. I had my umbrella. He got very wet, but he's a good boy. He did well, and we're now back on the saddle. Yes, after our holiday a couple of weeks ago. And the other thing I'd like to tell you guys is that if you haven't subscribed to the channel yet, to make sure you do. And also, if you enjoy my videos, make sure you hit the like button, share the video far and wide, tell your friends about my channel too. And I continue to believe that fiat currencies are going to continue to evaporate, because the people in charge of our currencies, they are completely inept. They have no idea of what currency and money is. And that's why I'm continuing to stack gold and silver. Is this advice? No, but I think you need to do your homework to make sure that maybe you should think about having some protection of gold and silver. Yes, it won't make you rich, but it will keep your wealth level secure, I would say, in the long term. I have a couple of affiliates for physical gold and silver. One in North America, it's Miles Franklin. They're one of the biggest bullion dealers in the US. You can get very good deals with them, and you can use my referral, which is Billy. Not very hard to remember. And my promo code with gold investments in the UK is Maneco 64. So Jeremy Hunt, who is Jeremy Hunt? Well, I think he was also an MP, a member of the government some years ago. He was the health secretary. Of course, didn't do a very good job, but he seems to always be up there. And I think it's interesting to look at a person's background to see whether he or she will be successful. So if you look at his early career, it says here, after university, Hunt worked for 2 years as a management consultant at OC&C Strategy Consultants, and then became an English language teacher in Japan. On his return to Britain, he tried his hand at a number of different entrepreneurial business ventures, with 3 failed startups, including an attempt to export marmalade to Japan. In 1991, Hunt co-founded a public relations agency named Profile PR, specializing in IT, with Mike Elms, a childhood friend. Hunt and Elms later sold their interest in Profile PR to concentrate on directory publishing. So any background in finance in the city of London, in markets. I don't see it. So that's what I'm trying to say here. Is this guy really fit to turn things around financially? I don't know. We'll have to wait and see and try to give him the benefit of the doubt. One thing, he did go to Oxford, which I'm not sure if that is a good thing. So it seems like all UK politicians either go to Oxford or Cambridge. Doesn't seem to be any originality there, any thinking outside the box. But be as it may, it has now come out that he's going to bring forward tax measures in a bid to calm the markets, as you see the FT reporting. And it's going to be today at 11 o'clock, the 11th hour, I guess. That will make or break, I think, the gilt market. Right now, we're going to look at the gilt market in a minute or so. But yes, it looked like his appointment last week and the walk back or the backtracking on the corporate tax cut didn't really do much to allay fears in the gilt market. And it looks like today he's going to try to make it so that the gilt market will calm down. We'll have to see. As I said, the guy has no experience in markets. He doesn't know how financial markets work, how confidence is something very fickle in the financial markets. Some of you have asked me to explain how bonds work. Some people don't understand the mechanism of bond prices and yields. Well, it's very simple. A bond is issued by the government in the primary market through an auction. They just borrow money, and they usually issue it at par or 100. And let's say the coupon is 5%. So if the auction goes through at 100 and then at 5%, the yield on that bond is 5%. You're putting £100 and you're getting £5 a year, semi-annually. That's how they pay the coupon in the UK. And the yield as well is 5%. But once the bond starts trading in the secondary market, if the price of the bond drops, another investor can come and buy it for 99, but the investor's still going to get the £5 coupon, but the yield will be higher because you're going to be getting £5 on something that you paid 99. So if yields are rising in the secondary market, it means that people are selling bonds, the prices are going down, and the yield is rising. The coupon is always the same. And that's how it works. And it's fairly simple. I know the bond markets are the biggest markets out there, but for some reason the financial press, the newspapers, the CNBCs, the Bloombergs of the world prefer to cover the stock market, but bond markets are huge, and that's how it works. So in the last 3 months or so, ever since August, because bond yields early this year were rising, bond prices were dropping, but by mid-June they kind of bottomed, bond prices, and yields started going down. But for the last 2.5 months or so, it's reversed, and it's really accelerated the selling in bonds. And why is that? Well, because central banks and governments have not gotten control of inflation. It's very simple. And back in the 90s, early 90s, prior to the bond market stabilizing, we had a group of investors or people called the bond vigilantes. And they were always keeping an eye on government spending. And up until recently, these vigilantes had been in hibernation, and they're back. They're back on the saddle, so to speak. And I think it's going to be very difficult for governments going forward. as I said, they've gone from one extreme to the other. When Kwasi Kwarteng came out with his mini budget, I thought, yes, tax cuts are good, but he also got to cut government, the size of government. And he didn't. And now we're going to get the opposite. We're going to get tax hikes, and they're going to try to cut the size of government, even though I don't really trust them to cut the size of government. They're talking about finding efficiencies in the medium term, in 5 years. They're going to kick the can down the road. So that's how I see this. It's not going to end in a pretty fashion. Maybe in the short term, they will succeed to calm the markets down. But I think trouble now is brewing in other countries like the US with the illiquidity in the markets, with their swaps that the Federal Reserve is starting to give out. We're seeing the US Treasury talking about buying their own paper. I mean, which is crazy. But one thing I would like to tell you, because I mentioned UK PLC earlier in the video, and it's just like any other company or corporation. Would you want to invest or lend to a corporation that hasn't made a profit in almost 25 years? A company that keeps racking up its credit card debt? I wouldn't. And this doesn't change at all. As you can see here, they've been running losses. UK PLC, the Treasury, since the year 2001, deficit spending. Back in 2010, as I said last week, and as I've said many times, the Chancellor George Osborne at the time said that they would have balanced the budget by 2015. Does it look like they're going to balance the budget anytime soon? I don't think so. And I don't think Jeremy Hunt is going to be any different yet to any of the past chancellors. Is it better to get a Labour government? No, they're all the same. And the Bank of England is just as incompetent, because they're ready to print £500 billion in less than 2 years during the pandemic in 2020, 2021, and keep rates at zero. And now all of a sudden, the Bank of England and Andrew Bailey are like hawks, and they want to raise rates. And just to point out another reason why they're still behind the curve, we're going to get the UK CPI and RPI data this week. It's going to be on Wednesday. So the retail price index, which is a much better indication of the rise in the cost of living, is still expected to be at 12.5%. And here we are with the Bank of England rate at just above 2%. CPI, which is being doctored with recently, they're not really calculating any many things since May. They've changed the way they calculate things. That's expected to be at 10%. So the inflation problem is still there. And yes, as I said, would you want to lend or invest in a company that hasn't made a profit in 25 years and will probably not make one forever? I wouldn't. So that's what the situation is. So now we're going to look at the markets. It's 8:22 a.m. London time. We'll start with a normal rundown, and then we'll look at the gilt market and the treasury market. So we've got spot gold up $8 at $1651.50. High's been $54.50, and the low has been $16.43. So we're up 0.5% in gold. Silver is up 1.2% at $18.50. It's up about 25 cents. High's been 58, low has been 18.18. The Dow futures is up 0.5%. Nasdaq is up 2/3, and the S&P is up just over 0.5%. The FTSE is down 1/3%, and the Euro Stoxx 50 is down about 1/3 as well. to the currency market. So sterling has rebounded a little bit this morning. We got up as high as 113.06. Right now we're at 112.43. That's up just over 0.5%. The euro is up 1/8%. The dollar is down slightly versus the yen at 148.65. And the dollar is unchanged. Actually, it's down 0.4% versus the Swiss franc, just above 1. And the dollar yuan is down slightly at 721.23. The dollar is unchanged versus the ruble, trading around 62 to the other currencies now. Aussie dollar is up 0.5%, 62.37. The dollar is down 0.4 versus the Canadian dollar, 138.25. And the Kiwi dollar is up 0.5% at 55.90. To the general commodities, we've got WTI crude up 0.5% at 85.15. Brent is up 0.4 at 91.30. High-grade copper is down 0.2 at 340. U.S. nat gas is down 2.7% at 650. And one thing that's positive for Europe is that I've noticed the Dutch TTF gas futures has been coming off significantly. We're down 6% at 133. So now to the gilt market, or the UK government bond market. So it looks like right now the bond market is giving a thumbs up to this Jeremy Hunt plan. We still have to see what the plan is, of course. At 11, they're going to come out at 11 and announce it. So right now, the 30-year gilt yield is down 24 basis points at 454. We were almost back up to 5 late on Friday. So that's encouraging. For now, the 10-year yield is down 20 basis points at 412. The 2-year yield is down 20 basis points at 3.66%. To the U.S. Treasury market, we've got the 10-year yield down about 4 basis points at around 3.97%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide, and think about subscribing to my channel if you haven't yet. And with that, I wish you all a great start to the week. Take care. Bye.